Hey everyone, this is Jack and welcome to your free update. Alright, so it's June 24th and we have exactly 7 days till July 1st. And seeing that today, here on the right hand side of your screen, represents today's move in the S&P, 115 points higher, NASDAQ was about 400 points higher. Alright, so what does this mean for going into the July 1st expiration for next Friday? Well, 50% retracements can be overhead resistance. We can consider this another air pocket to short. However, I'm seeing a few correlations that make me want to think 4,000 in the S&P comes up to us next week, maybe later on in the week. I'm looking out for a Monday flush only to come around and try to purchase. So we're going to break this daily time frame into a 30-minute chart going back 10 days. Good 10x bars across the board, but the most important part is really shrinking this entire map and looking at what is possible. And you'll see the 50% retracement here in yellow, and whenever I run the 786 up to 4036, I think that is a ideal target. I think it's a conservative target. If we do get some type of end of June short covering rally, that would take us up to 4100 plus, and that is the fire line way up there. Now, the reason why I think this is I think Fridays are starting trends that continue on the next week, and that's just one thing. It's not proof or any, it's not any type of, it's just theory that it's like, hey, if we've already started a 50% retracement, why would we not go back and push into the 4,000 level where, we had a lot of speculative traders shorting from 4,000, and they had a golden opportunity to be out of those things 2 weeks ago, or even 10 days ago, not even 2 weeks. So how does this all correlate to the commodity thing? So I'm kind of bullish on this market going into July 1st. Look out for a Monday flush. We'll be trying to buy this here either in the day trading room or in the futures room, whatever room you are a member of. We'll be covering all this stuff, but check this out. Go back to the daily time frame and I'll zoom out a little bit more. We've hit the quant pivot levels. If you use those, we've already hit our H2, and looking at a basically 100% retracement back into the previous highs, that takes you above 4,100. So what I don't want this to be is, a video about where I think we're going to go. What I'd like to do is just kind of a video on what kind of strategies you can deploy in an environment like this where you don't really know, it is kind of a spotty market at times. I think we're all kind of surprised a little bit in some regard of how strong this Friday has ended up being. But if you really wanted to entertain a risk-defined approach with very little loss, or chance of loss, check this out. So you can sell a deep in the money put credit spread. I do this all the time. This is one of my favorite trades, especially in bear markets, and it would have been a great trade today had I gotten filled for the credit that I wanted. But check this out, 7 days out, going to 4,000. By the way, a little asterisk here, you can totally have a butterfly at 4,000 for next Friday if you want to. I just wanted to start out doing the spread idea first. We can certainly take a look at that butterfly idea. So $20 wide here, you just subtract the credit you'll be taking in. I like this risk to reward ratio in a market like this, right? Pretty nasty rip on a Friday. Let's try to do it again on Friday, right? Maybe we get a little bit of a flush on Monday. If you don't want to, be too hasty, which is certainly normal. A lot of traders, just don't trade on Mondays. And I think that's a really good strategy. I kind of follow that myself. But if you're waiting for a flush on Monday, you'll get a better credit, or at least you won't risk getting filled just at some measly mid, right? So let's see if we can get maybe more credit for this on Monday, but we'll be talking about this strategy 4,000 extending into 7 days in the next Friday. If you wanted to do a butterfly, we were pricing some of these out today. It was pretty fun. So 4,000 going out 7 days. I'll show you what this looks like. And you can kind of do this in a lottery style way, which is super fun, or you can just, you know, kind of have them as a medium lottery. So 25 wide instead of 10 wide. So let me show you the risk to reward there. You know, getting filled at the natural gets you filled at $2. See if you can do better than that on Monday if we gap down or something. And by the way, my whole take on Monday is this: if we do gap down, it's, for me, that's like the dealer showing you the card before it's even out on the table. And you know, who knows? We'll see. I know there's no guarantees, but you know, keeping a butterfly up here at 4,000, I think, even as a hedge, is well worth your time, and hopefully they just work out. I mean, I think the way we're reading this market, if you take a look at a gold S&P correlation, daily chart on gold on the left-hand side looks horrible. Looks like it wants to go sub 1,800 again. Take out the lows possibly at 1,785. That daily squeeze, not looking too good. All right. So, you know, on top of that, if you want to talk about correlations and you're talking gold, why don't you talk Bitcoin? So I have much lower targets on Bitcoin this year. May not be your best news for you, but you know, as somebody that's been buying crypto for 10 years and holding on to it, it's just another roller coaster. It's just another loop in the roller coaster. So if it goes back down again, I think there'll be a lot of happy people. We're under the weekly 200. We are under all the stacked EMAs in a major way, and we'll see what happens. So all these commodities here are getting hit pretty hard. Gold isn't holding its bid, and you know, look at this chart. I mean, is this something you want to come in and try to buy? I understand the argument of making higher lows, you know, slightly higher highs. You know, can it break out? Sure, it's got a daily squeeze, you know, but all things considered, and you take a look at the heavier moving averages, which would be the blue line here is the 200, the aqua line is the 100, and the magenta is the 50. We're under all those with flying colors, and look what we just did. I'm going to zoom in and show you this. Well, zoomed in too far. There we go. The red line is the 34, and the orange line is the 21. The 21 crossing through all the way down here to the 200. You're like, well, Jack, that's a lot of days, 21 and 200. Don't you think you're fishing a little bit here? No, this is something I've looked for a lot. It was something I was looking at back more than 10 years ago. I was just starting out moving averages, right? Well, we're now kind of breaking down below, and that squeeze just looks really ripe for a nice short. So for all you that have wanted to be long gold, you know, enjoy it. You know, it reminds me of that Gladiator movie. Are you not entertained? I think gold's a short here. We'll see what happens, but it's the way I'm looking at it. And you know, I certainly don't want to be long anything that's correlated to Bitcoin or just correlated commodities in general. So long in the S&Ps next week. We'll talk about it. Gold for a short. And, you know, if you wanted to play something in tech to the long side, you always have your NVIDIAs, you have your AMD. I'd pick NVIDIA out of the two, but, you know, you've got Shopify. You've checked that out. I mean, Shopify's had pretty awesome move here today, 6%. The day before that, you had a squeeze reversal. I know a lot of y'all caught that one with John. Congratulations. It's awesome. But let's see if we can do, you know, a continuation of what we started here on Friday for next week, and not try to just be out the gate bearish just because that's the easy thing to do, right? I just don't want to support it. I think S&P's going higher as a surprise, as kind of another air pocket to, you know, to later on we can short it. But let's give this, you know, 50% retracement that we made today, and the combined making of yesterday and the day before. See if it goes anywhere. Let's see if we can flush on Monday. Let's come in, try to buy it, and see if it makes sense. All right, pretty straightforward there. S&Ps, gold. We always cover all the commodities, so we'll talk about crude a little bit more, and let's see how it goes. All right, have a great weekend, and we'll see you in the next update. Thanks for watching this video. If you've enjoyed the video, be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. Good trading, and we'll see you in the next video.